Vikas, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you for inviting me.
Couldn't be one more contrast. Full formal suit, and here I am looking like a complete looka. Okay, Vikas, first tell us about AIF and PMS Experts India. What is it? What services does it offer? Let's start from there.
Sure. Thank you so much once again, and happy Diwali to all your listeners. I'm sure they'll have good time. So, Anupam, before I'll tell you a little bit about AIF PMS, let me just quickly tell you about myself. So, I spent about almost 2 decades in the industry and worked with large organizations like HSBC or Motilal Oswal. All my life, I've been doing alternate investments and portfolio management services. So, what I've learned over a period of last 2 decades is that there's a huge gap in the industry. I mean, first of all, the industry is highly scattered, as in there are good quality portfolio managers, deserving managers, but they don't get allocations because they don't have access to right kind of investors. Or there are good investors, but they don't know which are the boutique, portfolio management schemes or alternate investment funds where they can invest and enhance their overall returns. So I thought, why not I would kind of build a platform which would help a sort of ecosystem which would help all the parties together. It's going to be a win-win situation where we'll onboard all the high-quality portfolio manager, irrespective of any kind of conflict of interest in terms of commercials, etc. At the same time, invite high-quality portfolio managers and the investor community as a whole, and then do about doing the transactions. So this used to be traditionally in the hand of a large wealth outfits. But I thought I'll kind of create this platform, and here I am. It's been 2.5 years. I'm glad to share that we are one of the largest platform when it comes to investing in alternate investments and portfolio management services.
Very nice. So tell us about the firm, AIF and PMS Experts. What do you guys provide? Like, if there are any listeners who are interested in finding out more about you,
Sure.
where should they go? What are your, expert services that you help your clients with?
Right. So, there are 2 or 3 things essentially we thought while building up the platform is very, very important. One is, of course, to build the platform in terms of unique products, because these HNIs and ultra HNIs, they are the one who actually invest in these funds, because, as per the SEBI norm, the minimum threshold for investing in PMS minimum is 50 lakhs rupees, and for AIF it is 1 crore. What 2 or 3 things that I am noticing here is, one, there is a huge value migration from mutual fund investors to come in and invest in PMSs and AIFs. So we thought we'll build a platform and we'll build a process, and the process basically would help all the experts in my team. We are about 14 of us now. We have started 2.5 years back. The team of experts, their full-time job, right from peon to CEO, myself, in our organization, everybody is involved in doing only one thing, which is doing a pure research on AIFs and PMSs. So what we essentially do is to work closely with these portfolio managers, and at the same time try and understand the need of the investor, and then match this together as an interface between both the parties. So, there's a saying that if you keep on doing the same thing again and again, you sort of tend to develop expertise, after few years down the line. And that exactly has happened here. So we are a pure data-driven organization. We go to an extent of consolidating the entire performance of all the AIFs and PMSs in India. I mean, I'm talking about the high quality which are selected by us. And we are so data-driven and so unbiased that we put up this data in front of the client. Let the client to decide, and let the deserving portfolio manager, based on their performance, based on their overall investment philosophy, let the deserving manager to get allocation. That's the thought process.
Nice. Just to get one question out of the way, which is your cost model or business model, so that I assume that, do you charge me as an investor, or do you get your fees from the fund manager? How does that work?
No, so here we are an interface between investor and portfolio managers. So we get our distribution, which is commission, from respective fund houses.
Okay, folks, so you got that right. Because what has been happening in PMS? Let's talk about that. One is we are almost done with the year 2022, the calendar year 2022. Right. How many PMS schemes are out there, first? Okay, and second, how has this sector overall been doing now that it's been a fairly long time since the pandemic hit and the flows really happened at that point of time? Maybe wo sab ho gaya, now we're kind of probably settling down to a slightly more business as usual kind of a scene.
Right.
So first question to you, how many PMSs are there versus how many there were pre-pandemic, let's say, when you guys started?
Right.
And how is the sector been doing overall in terms of flows, in terms of everything else?
So thank you for asking. This is a very interesting question. A lot of people don't know, Anupam, that PMS got regulated in the year of 1993, whereas mutual funds started getting regulated by SEBI in 1996.
Hmm.
So PMS per se has a history, has track record in place. For example, I remember during 2000 and 2001, that was a time when these broking houses, like Motilal Oswal, ASK, they were the first one to get a complete license from SEBI to start their PMS. So as we speak today, we always talk about mutual fund to sahi hai, no denying on that. And we talk about Reliance Growth Fund, for example, whose NAV has grown from 10 rupees to almost 2,000 rupees as we speak today. Well, there are portfolio managers who started their journey in 2000, and 1 crore, if I have to quantify in terms of numbers, 1 crore has grown to almost 47, 48 crores
Wow.
in a matter of last 20 years. So what essentially I'm trying to tell you is this industry has been into existence for quite some time, and there were couple of asset management companies, tried and tested, but somehow this didn't scale up to large extent, and they kind of winded up their PMS business. But of late, from 2016-17 onwards, what we are witnessing is that there are good quality mutual fund managers resigning their job from their job and then starting their own PMS company because they have sort of desire to start their own and scale up the business, and they're doing fantastic job. Today, as we speak, there are more than 85 good quality portfolio managers to whom we cover. There are more than 100 now, and out of which the total asset under management under this PMS category would be anywhere in the tune of 1.5 lakh crores. This I'm talking about HNI and ultra HNI. Of course, I'm separating the EPFO mandate which comes from government. That also is undertaken the PMS platform. So that's a separate thing. But 1.5 lakh crores is a pretty sizable AUM, and it is shaping up very well.
And like you said, there have been many others also, like Motilal Oswal, who have been there. It's a very interesting trend, right? I want to talk about how a lot of HNIs who were invested in mutual funds are, in the last 2 or 3 years, have now shifted towards PMS. A, why has that happened? Okay. And B, do you see that trend staying going forward?
Right. No, that's a good question, Anupam. If you look at the developed economies, you see that most of the chunk has either moved on the passive side or has come to a boutique wealth management or boutique portfolio management companies. And the reason is, one, mutual fund to sahi, it has now almost 2.5 years of track record. There are a lot of investors who are now mature. They've sort of habituate about creating wealth for over 2.5 decades, and seen 2 or 3 major cycles like dot-com bubble, your Lehman Brothers crisis, and then the recent past of COVID crisis. Now these investors have their own sort of love for direct equities. So, and then they, due to their professions, whatever they do, they're completely involved there. They need professional managers who can actually manage their equity, to whom they can give their mandate to sign the power of attorney that, look, you invest on my behalf, and then create a wealth. Now these investors have become, because they become mature, they look out for not mutual fund versus PMS, but mutual fund and PMS. So some amount of money like your SIPs and all that, which is going, and they've learned and habituate about creating 15, 16, 17% kind of return. And they're looking at enhancing a bit by giving a mandate to the portfolio manager, saying that, hey, look, you manage my portfolio, you do complete research and deliver the returns, whatever I'm looking out for.
Okay, there's a chance that some of our listeners might be at the threshold of 50 lakhs, which used to be, I think, 25 lakhs, which is the minimum amount needed to invest in a PMS. And I think some fund managers have increased that further for a certain, for whatever reason that they might have.
Yeah.
Could you just walk our listeners through the main difference between a mutual fund and a PMS? I mean, how are the products fundamentally different, and why have fund managers who used to run mutual funds now are shifting to structures like PMS and AIF?
Right.
How is that different?
So 2 or 3 things here. One, if you look at mutual fund is all the investments are done at the pool level. Now PMS is supposed to be boutique in nature, where you either customize the portfolio, or there are times where, for example, if somebody is good at mid and small cap as a portfolio manager, Now you need some amount of liquidity in the stocks when you invest. There are PMS managers who do a complete first-hand research, reach out to those companies at an early stage of their growth curve, identify them at the early stage, and then ride through the entire growth journey by investing in those businesses. That is where the real differentiation is. So these PMS managers, why they're shifting is one, mutual fund has become very large, and at times when you have a bigger AUM, it's very, very difficult to generate similar sort of returns consistently. So therefore, some of the managers, they want to create a customized PMS portfolio, or they want to invest in some high quality mid and small cap. That is where they've started, and they're doing a fantastic job there.
Okay, let's move to AIFs, because AIFs is a really, it's a little bit different. One is that you have a much higher entry minimum investment amount there. I think is how much is that?
Once here.
1 crore. So first we've got that, and the structures there are also even more evolved than a PMS,
Right.
because in AIFs I believe you've got
Yeah.
hedge funds, long shorts, and the
Right.
ability to short, which you might not have in a PMS. So if you could just walk our listeners through what exactly is an AIF,
Right.
how is it different from a PMS?
Sure. So this industry got regulated in the year of 2011, and it's been now almost a decade. Now people used to call it venture fund, they used to call it investment banking fund, and blah blah blah. But actually, SEBI said, look, all these has to come under one single platform, which is alternate investment funds, and that is where the real scale began. Now there are three different categories under AIF. Category 1, which essentially invest in startup funds. You have category 2, which essentially invest in private equities. Like before you get listed, there are companies who will come and fund the company, take the stake, and make the maximum out of it, and then allow the company to get listed and come under secondary platform. And then you have category 3. Now within category 3, there are two broad structures. The one structure is long only, and the other structure is long and short, which is you called it hedge fund. Now these are the broad three categories. I'm glad to share that the way it is shaping up, your category 3 long only has become now almost 70,000 crores as we speak today, which 10 years back used to be negligible, hardly 1,000 crores. Your hedge fund is shaping up well, is now reaching almost 10,000 crores in terms of the size. And that's a separate absolute category which most of the people are not familiar with. If they have money, they go to arbitrage fund in mutual fund, make about 4-5% and get happy. Now this category is generating consistently, as I can see, and I'm talking about official track record, SEBI approved data points, has been generating 6.5-7% post fees and post expenses. So it can be considered as debt plus category, which is called long short fund. And there are good quality managers who are doing this consistently. And then you have a Cat 1 and Cat 2 both put together is now reaching to more than 2 lakh crores. Now what happened, Anupam, is if you look at, you've heard that our Honorable Prime Minister talking about 100 unicorns between 2010 to 2022. When these companies really grown to that level in terms of their size, which is $1 billion in terms of market cap, our contribution as an Indian investor, HNI and ultra HNI, is less than 0.5%. When you look at the globe, across the globe, the percentage is as high as 20%. Now this clearly indicates that we didn't make money. Only FIIs who invested in our Indian company made maximum out of it. Now from here, thanks to regulator, now these AIFs, what they're doing is 2 or 3 things. These AIFs essentially funding these startups, and that's the startups ecosystem which is shaping up well. And a lot of HNIs and ultra HNIs have shown lot of interest to invest in these startups. Now, unfortunately, they don't have enough understanding of the balance sheet, or they even if they understand, they don't understand the valuation game. Now, therefore, there are good quality managers who collect money from these investors and then make a pool and then invest on their behalf in these companies. So in nutshell, if I have to conclude, I would say AIF is a perfect blend of mutual funds and PMS. In the sense that in mutual fund you have daily NAV. In case of AIF, SEBI says that you have to have monthly NAV. So you get an NAV where you get to know the valuation. Mutual fund is managed at the pool level. AIF is also managed at the pool level. It behaves like PMS in the sense that PMS boutique manager at times creates a concentrated portfolio. Similarly, in AIF, because of the flexibility given to the structure by the regulator, they create a concentrated portfolio, which sometimes beat the benchmark significantly. So that's the major difference between AIF, PMS, and mutual funds.
Very interesting. Folks, you want to know more about this? We've had, I think on the AF side, we've had Trubeacon from Nikhil Kamath has come on Paisa Vaisa. We've
Right.
had Andrew Holland from Avendus who's come on Paisa Vaisa. And I think Waterfield Advisors also, which have very interesting fund of funds, AIF structure. All three have been on Paisa. You can check out their episodes. Because before we go into the break, I just want to understand the taxation differences between PMS and AIF. I think this is a pretty important point for any investor to know, especially a first-time investor, that when you're investing in a PMS, how is that taxation different, and when you're investing in an AIF, how is that taxation different?
Right. So, well, I'm not a chartered accountant, so one disclaimer here that I will just share whatever is the industry practice. So, in case of mutual fund, generally when you invest in these securities, you have capital gain.
Sure.
Capital gain could be either long term or short term. So is the case with these instruments. So there are three different instruments defined by the regulator. Like you have mutual funds, you have PMS, and you have AIF. In mutual fund, if you hold for more than a year, you have to pay long term at the time of redemption. Whatever redemption money you get, you will have to pay whatever is the gain. And in mutual fund, there are no short term taxes. Because it is done at the trust level, so that is exempted by government income tax department in India. When it comes to PMS, it behaves like a direct equities. So you have short term and long term both. Long term, is around 10%. Everybody pays. Short term is 15%. So if your portfolio manager is booking a profit and doing some changes in the portfolio, whatever would be the gain, you'll have to pay at the end of the year 15% on that. That's the industry practice. Then it comes to AIF. Now, in case of AIF, Cat 1 and Cat 2, you'll have to pay the capital gain. You get indexation benefit there because it acts like a debt category taxation. And it comes to Category 3, which is pure long only. All the taxes are paid at the instrument level and not at the client level. So, therefore, they also have to pay capital gain, which is long term and short term. But all that is done at the fund level. So is the case in the hedge fund also. But in case of hedge fund, because it invests in various options and calls and derivatives, therefore regulator says that it has to be considered as business income. And business income, the highest taxation rate, because it is paid at the instrument level, is about 44-45%. Now, so this hedge fund is considered as a debt plus category. Therefore, even after deducting the taxes, etc., you end up getting about 6.5% in your hand.
Depending on which fund.
Depending upon which one.
Folks, on that note, we're going to take a small break, and on the other side, we're going to talk about how to choose an PMS and AIF that is relevant for you. So don't go anywhere. We'll be right back.
Hey, it's been another great week on the IVM Podcast Network. On Postcards from Nowhere, Utsav travels to Venice to uncover Leonardo da Vinci's lesser-known accomplishments in botany. On the Vox podcast series, Monica Khurana talks to Biswapriya Bhattacharjee, Director B2B Technology, Kantar, about the measurement techniques in voice and audio space. On The Longest Constitution, Priya digs deeper to understand what is the Gundas Act and examines the Golaknath case of 1967. On This Round is on Me, Gauri is joined by Lisa Mangaldas, author and sex-positive content creator. She shares the journey as a sexpert and the need to normalize conversations around sex. And on Think Fast, Varun and Suchita discuss Twitter's massive employee layoff and how the Tirupati temple is richer than Wipro and Nestle. Once again, don't forget to visit our merch store on ivmpodcasts.com. We have some exciting stuff for you. Follow us on social media. We are IVM Podcasts on Twitter, Facebook, Instagram, and LinkedIn. If you like our shows, spread the word, tell your friends, and don't forget to rate and review them wherever you're listening to them. You'll also find all our shows on youtube.com/IVM Podcasts. And finally, we would like to thank our sponsors this week: Bumble, Heads Up for Tails, Kotak Privy League Program, and HDFC Mutual Fund. Thank you for making this possible.
And welcome back. Okay, because I want you to explain to our listeners that what kind of an investor is ideal for a PMS and what kind of investor should be looking at an AIF.
Right. I would say that it really depends. I mean, somebody who's retail investor having a portfolio of less than a crore, clearly it is no for them because, minimum threshold is very high here. But somebody who's got more than a crore of portfolio and really wants to, interested in to learn also how capital market operates, then clearly AIF and PMS is something for them. Now you talked about that. How do you choose that? So we'll come to that in.
We'll come to that later. I
Okay.
just want to
Yeah.
get this one out of the way because
Alright.
in a lot of my conversations which I've had, people think that when you put your money into, let's say, a PMS, I won't go into an AIF
Right.
as of now, but when someone who has 50 lakhs and who wants to move in from mutual funds to a PMS, or forget mutual funds, a lot of people have holdings in stocks
Right.
themselves. They would have X stock, Y stock, and they just want to, probably move to a structure where they want someone else to manage their money.
Right.
What I'm asking you is this: the expectation in this is that a PMS means higher returns, okay, and they tend to move from a mutual fund or from their own holding to a PMS structure expecting higher return because the person who's handling it is an expert. So can we just talk about that a little bit, that when I transition from either my own stocks
Sure.
to a PMS, okay, or from my own mutual funds to a PMS, what should I expect and what should be the rationale for doing that kind of transition?
Right. So see, in case of, suppose you have direct holding. So we call this asset classes like, this category is called non-promoter and non-institutional money. Now, if you look at in India, non-promoter and non-institutional, the total size of this industry is reached to almost 27, 28 lakh crores. So essentially, I am saying that there are investors who have these holdings in their demat account. Now, one, if they don't get time, they expect the money to be given to professional managers. What you rightly said, there are two perceptions about this industry. I'm not blaming them. Blame goes to the industry. There were few players who could not succeed and they did here and there, and therefore this industry could not scale to large extent. Now, PMS, if you look at, there are two perception. One is that it's very costly, and second is very risky. Now, I think this is not true. Gone are those days now. Thanks to regulator, this has been structured a lot of late. For example, there was a time when PMS used to have entry load of 2% when you are investing. Now all that entry load and all that is abolished by the regulator. So it is as good as mutual fund. You give 100 rupees, it is invested in stock market. Number two, when it comes to risk, see, when you invest in mutual fund, if your money, most of the time your portfolio, your mutual fund manager would be investing closer to the benchmark. He would not afford to go beyond the benchmark and identify companies and invest. That is the case in PMS. So to that extent, I agree with you that there would be an additional risk. But at the same time, thanks to now many portfolio managers, there are different categories. Like in mutual fund, you have large cap, mid cap, small cap, multi cap. Similarly, in PMS also, there are portfolio managers who have only large cap and they stick to large caps. Now, when you invest in large cap, you do it through mutual fund or you do it through PMS, the risk is almost same. It's like when I am going out of this place, I have chances of meeting accident. So I sit in small car or a bigger car. If accident has to take place, it will take place. So the risk is negligible there. But there are, thanks to these PMS managers, now there are different categories. So somebody who's looking at PMSs, how do you look at risk? Risk you look at as beta. Now this is little technical for your listeners, but I'm just like to highlight here. When you look at beta, there are good portfolio managers who have now 10, 20 years of track record of generating good 19, 20% CAGR. If you look at their beta is lower than some of the mutual funds in the same category. So I'm talking about, one beta is considered to be a good. Here the beta is as low as 0.78 or 0.8, and at the same time returns are higher than mutual funds.
Very interesting. Because let's get into the PMS selection now. Like when an investor comes to you, what kind of a criteria do you have or a process that you have? Do you, for example, start with gauging my risk return profile and then recommend the right PMS to me? I'm asking this, why? Because I've had friends who've invested in PMS and एक साल के अंदर यार मजा नहीं आया, market यहाँ गया वहाँ गया, I didn't make that
Make
much money.
money, yeah,
Which is why I had asked you the question about
yeah,
how people think that investing in a PMS will give them a higher return, which may or may not be true. I don't know because the data might say something else. But what process do you follow when you are recommending a PMS to me?
right. Now, what you rightly mentioned, that I also come across a lot of my friends and they also had similar sort of experience. uh,
More so in the
उसमें
last year because the market has not gone anywhere in the
right,
last 1 year.
yeah, इसमें क्या होता है ना अनुपम जी, आप देखेंगे इस if you look at most of the investors in this industry have invested seeing the last 1 year return or maybe last 1.5 year returns or 2 year, और उसमें बोला कि अच्छा रिटर्न आ रहा है चलो इन्वेस्ट करते हैं ऑल दैट. But that's not the right way. It requires good amount of research to be done. It requires good amount of domain expertise. So what I thought, because I am from the same industry, we thought why not we'll build a process around at AIFPMS.com, and that process, our process is more of manager centric process, in the sense that it's my hard-earned money, it's your friend's money, giving it to a portfolio manager. I should know everything about portfolio manager, because ultimately who is managing my money? The portfolio manager. So our process is very manager-centric approach, we call it, and we've defined this as a 3 I's framework. So what is this framework? I'll just take a minute quickly to tell you, and any of your listeners may be listening to you and want to explore, they can do so. So the first I is basically the investment manager. Who is the portfolio manager? What is the style the investment manager is following? If I am a growth investor, for example, I just saw the return of last 1 year and given money to portfolio manager who follows value investing, then my thought process is not matching with his thought process, and that is where the accident takes place. That is where most of the time investors come out of PMSs so early. Ideally, their time horizon should be more than 5 years and above. Because you're giving mandate to a portfolio manager, you should look at least 3 years to 5 years time. So the first I that I talked about is investment style. So there are managers who follow value style, there are managers who follow growth style, there are managers who follow GARP, maybe growth at a reasonable price, or maybe there are few managers who are contrarian. Now, sometimes what happens that suppose I am the investor and I have a crore, I would give 50 lakhs to X manager and 50 to Y. I feel that diversification is done. But if both of them follows the GARP model, then it is not diversification, it is duplication. So therefore, we put a lot of efforts in terms of doing all sort of research, that what's the style which portfolio manager follows, and whether the style they stick to that style during the bad times or not, because market goes through its own difficult time and different phase as well. The second thing that we examine is the portfolio quality, because essentially if your quality of the portfolio is good, no matter what the time may be, but eventually you tend to make money in the long run. I mean, for example, if you look at any good quality companies in India, right from Asian Paints to Britannia, all of them, or HDFC, when you look at, you go to moneycontrol.com or any research based online app.com, when you look at their earnings and when you look at their prices, eventually they get along in the long run, in the sense that in the long run your stock appreciation is nothing but slaves of the earnings. It reflects the overall size of the company. So therefore we put a lot of efforts in terms of doing our own research, what sort of quality they bring on the table. Now at times there are managers who say something else when they speak with their investors, but eventually they will have yes banks of the world in their portfolio.
In a PMS?
Yeah.
Hua hai,
yeah, ऐसा हुआ है.
Wow. I didn't know
So essentially what we do is we look at since inception the portfolio, and we look at how many calls have gone wrong, how many calls have gone right. That gives us more conviction in terms of whether the portfolio manager is really identifying high conviction ideas for which investor has given money to, or he's buying selling based on the recommendation coming from his stockbroker. So that needs to be examined very, very carefully.
That is the process, 3I?
Yeah, and the third last thing is we have a formula which we have derived, that investors do not like too much of roller coaster ride. So we look at somebody who is maybe at a quartile 2 ranking, but consistently at quartile 2. Unlike some portfolio managers who are in quartile 1 ranking and then very next quarter they are in quartile 4 ranking. So we do not like to work with those managers.
Because what I'm trying to understand is that the PMS industry, at least the last few ones that have opened in the last, let's say, less than 5 years. Unka to zyada track record nahi. There's not much of a track record out there for these people to understand. And unlike a mutual fund, a PMS is very, very individual driven. A mutual fund is institution driven, and also there's much more data to any given scheme in a mutual fund than especially those that have been existing for a long time.
Right.
So do you think that lesser quantity of data, 3 years, 4 years, 5 years, you still think that is, it's enough for someone, it's enough for you to recommend a PMS to your client?
Right. So we do create sometimes some exceptions based on if the portfolio manager may be starting now, but what sort of track record he brings on the table as far as his career is concerned, where has he worked in the previous organization, or which domain he has worked with, what sort of expertise his previous organization brings on the table, and what expertise he brings on the table, and whether that is getting along with each other or not. So all that needs to be examined very, very carefully.
Very interesting. Okay, do you have a similar selection for AIFs, or is AIF different?
AIF is slightly different because most of them they are close-ended in nature. So therefore they don't have track record to be looked at. So therefore we don't look at track record per se. What we look at is again the quality of the portfolio managers, their expertise and underlying commitments.
Very interesting. Okay, so winding up the episode, last few questions for you, Vikas. How does the process work with you? What are your charges? What are the scope of services? In scope of services, let me take an example that I sign up with you. You recommend a certain PMS to me. Say after 6 months or 9 months or whatever it is, I just don't feel that I want to be there. Do you help me to exit that or change or switch? So I'm just trying to understand the service that you offer over the lifetime for me as an investor, and what are the charges involved out here?
Right. So by nature, if you look at, we are a boutique wealth management outfit. So our job is to manage my client, his expectation based on the risk appetite. So we have set of questions which we discuss with our investors, come to a methodical way of understanding and analyzing the risk appetite of the investor, and based on then recommending which fund to be looked at. Number one. After investing, suppose investor has the option to go direct also. This is as per the SEBI norm. But no portfolio manager would ever say that, look, I am underperforming, you take the money out. But because we keep an eye on the portfolio, we keep an eye on the track record, we work closely with these portfolio managers. And wherever we feel that the portfolio is underperforming for long period of time, or maybe prone to make more mistakes. And it happened with me where I gone on record officially saying that ये portfolio में पैसा नहीं बनेगा, and by analyzing this, we manage our clients' money with full of expertise. We review the portfolio every quarter. So there is a methodical way of one identifying those portfolio managers and then mixing around. Like for example, if you have a crore to invest and you want to choose 2 portfolios, I would look at 2 different styles. And these styles should complement each other. So when we take the mandate from the investor, we build the lifetime relationship, as you rightly said. And when we are building up the a lifetime relationship, we look at how this money would go to the next generation. That is very, very important. So all that needs to be discussed with client, and then we take the mandate. But we don't do anything else other than AIF and PMS.
And last question, Vikas ji, I have to ask, kya lagta hai market? The most favorite question that all of us have on the stock market.
Right.
Stock markets. What do you think lies ahead of us?
Very difficult to say that I am not the expert in this area, but I can only share my experience. I've been in this industry for over 20 years. What I feel at this point of time, India is its inflection point, in the sense that if you look at before COVID and post-COVID, before COVID, we were, in terms of our size of the economy, we were at $2.82 trillion. This is all in dollar term. As we speak, we are $3.52 trillion of economy. We are the 5th largest economy in the world. If you look at the IMF projections, which have just come in 2 days back, clearly indicates that we are the fastest growing economy in the world. Looking at these data points, I clearly feel, and there's one more data point that I want to quote here. If you look at the GST collection, that's a very good way of measuring the overall health of the economy. Even we clocked last month 142 lakh crores. This clearly indicates that our economy is not hospitalized the way it was in 2019 and 20, to large part of it. We are up and running now. So clearly we see that there's a structure changes in the economy, and all the reforms undertaken by India government has started paying off now well. So strategically, when I look at India is amongst the globe, while there are a lot of noise around as far as global markets are concerned, and some of the markets are down by 25%, including US, but India is not down by even 1%. The index is at the same level where it used to be, close to all-time high.
Yep.
There was a time, Anupam, when anything used to happen, small thing in the world, India used to get down, and we were very sensitive that way. But today, if you look at India as an economy, it's shaping up well, that even some of the developed markets are down by 20%, we are not even down by 5%. So clearly, this growth is here to stay, and I feel that next 10 years down the line, the economy has the potential to become $10 trillion. That's what I feel. So I think clearly, according to me, we have a great time coming ahead.
Yeah, folks, small correction out there. That's 1.42 lakhs crore for the GST. Of course, I wish that we also hit 142 lakh crores like Vikas ji said for GST, because my God, that would be really good. Because I just, realized that the mutual fund industry now is 12,000 crores per month.
Yeah.
Autopilot.
Right.
SIP, that's it. Na right, left, market, upar gaya, niche gaya, whatever it is, 12,000 crores comes month after month after month, and that gives a great support.
Right.
You think anything of this sort can happen in PMS or AIF? Do you see a steady flow coming in despite the market, like you said, being closed at all? It's not gone down globally.
Right.
Yes, you're right about that.
Right.
But it's also not given any major returns in the last 1 year. You think flows will sustain despite this? Like how it sustained in the mutual fund industry on the SIP side?
Well, mutual fund company, these guys have done excellent job. They've reached out to every small investor. But if you look at, there are two things that I want to highlight here, Anupamji. One, we had 3.5-4 crores of demat account. That has now reached to 10 crores of demat account. So that clearly indicates that the love for direct equity is not going away, it is coming in. And eventually, these guys are preparing themselves to become eligible investor in PMS. If not now, 10 years down the line. Number one. Number two, you look at under the Dhan Jan Yojana of our Honorable Prime Minister, more than 35-40 crores of saving accounts have been opened for the first time. These guys even didn't know how to save money. They are actually saving money for the first time. You imagine the kind of flow which is likely to come. So mutual fund penetration in terms of SIP and all put together is not even 4.5% today. So long way to go for economy like us.
Folks, that is it. On a very positive note, that is a wrap on this episode of Paisa Vaisa. My guest, Vikas Agrawal, founder of AIF and PMS Experts India. Vikas, thank you so much for doing this for our listeners.
Thank you so much for hosting me here, Anupam. It's always pleasure talking to you.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.